Welcome to episode 2 of my favourite series, my 0 to 100k Vanguard investing portfolio. For those of you who might not know, this is a series where I invest everything I've made right here on YouTube. Literally every penny from ads to affiliate to sponsorships I'm putting back into this series. I wanted to do this as kind of a challenge to myself, and it also forms part of a bigger strategy in how I'm planning to retire early. I'll have a full video on that coming soon, so if you haven't already, do subscribe and make sure you turn notifications on so you don't miss these episodes. Because I know sometimes YouTube doesn't show all of the videos to all of my subscribers. But also, the main reason I wanted to do this is to just show transparency. People don't really show what they're earning on YouTube or what they've got invested, so hopefully this kills two birds with one stone. So I'll share what I've got, how it's going, and give my general thoughts. I also want to keep this series really interactive, so if you have any thoughts about what I should do or sell, do let me know in the comments down below. So with that being said, let's dive straight into what I made last month. So here's everything I've made so far in this nice little table. What I was thinking about doing here is setting some goals about how much I should want to make each month. Let me know if you think that's a good idea or not. I haven't done it so far because I just didn't want to add any pressure to maybe take sponsorships I don't want or kind of do things to get more ad revenue, so I've just kept it quite open so far. So first up, we've got YouTube ads. That's the ads you see on these videos. This seems to vary quite a lot month to month. So in April, I actually made £528. That's down from £725 last month. And that's because in March, YouTube was really pushing my beginner investing videos, and it just seems to have completely just fallen off a cliff. Now this is gonna vary massively depending on what kind of videos I make. I've noticed it's dropped even more recently, maybe back to even December or January levels, possibly because of what people are interested in the moment and maybe the type of content. The type of content that seems to do quite well for me is the kind of comparisons or reviews, so maybe I need to do more of those. The only way I'm going to be able to boost this massively is do more daily videos on the latest trending topics. So it's still a bit of a learning process. I'm still trying to figure out what you guys want to see, but hey ho, we'll just see how it goes. Match betting, again, I'm not really doing any match betting. I've still got the column right here. I've actually pulled back a bit on it recently because I don't want it to show if I'm going to buy a house, because although you make tax-free profit, it is also still kind of classed as gambling. I'm sure you could explain that to the mortgage people, but I don't want to take any chances. So next up, we've got affiliates, which by far has been my most successful this month. And that came in at £2,307, which is just mind-blowing. That's almost as high as what I got back in November. And November was only that high because it was a combination of the past months. So the reason, of course, this has done so well is I do my ISA comparisons and everybody's looking for a new ISA. So this has done really well last month. I don't expect this to last by any means, but it's nice while it lasted. Sponsors was pretty decent last month because I've been able to secure a kind of long-term sponsor. That's at 1,250. So if I was able to get a few more sponsorships on a regular basis, that would help the channel out massively. So I think that needs to be my target. I've got a really good crypto one now, so if I can find a good investing one to go alongside it, it would massively help. And that goes towards things like my editor, and of course it just goes back into this series. I have been buying some equipment, like I bought my microphone, which cost me like 1,100. I'm not actually taking into account those costs at the moment. Because I'm able to use it for my other business as well as this, I can kind of get away with it as an expense. And I do want to keep reinvesting. I could do with a new lens, a better camera, and maybe some better lighting, as well as a new set when I move house, so we'll just have to see what happens. Patreon came in at 535. That's slightly down from last month, but I'm still super grateful for anyone who signed up. Patreon's a bit of a weird one. I've kept it around £5 and there's still some slots available. It's quite a tricky one because I want to build kind of a free Discord, but in the same time, if people want to ask me questions, I just don't have the time. So by charging £5, it helps support the channel, but also kind of gives you guys an opportunity to ask me any questions you might have. I do feel really bad because I know people email me paragraphs worth of questions and like 1,000 words, but I just don't really have the time with making these videos. I could answer all of those, but I just won't be able to get more videos out. So if people sign up for that, it actually helps me in two ways and it gets you some answers. I'm really stoked that we've got a nice little community going in there, so thank you for anyone who's joined so far. So in total, that actually brings April to a whopping 4,439, which is just mind-blowing. It's actually been my best month so far. Like I said, I don't expect that to continue by any means, but for the time being, it's really great. I should get a bit of a boost over the next few months because when people sign up, it does take about 6 weeks for me to actually receive any kind of affiliate money. So I can see it doing quite well over the next couple of months, but then it might start dropping off. So I do need to start being a little bit more creative with the type of income I'm generating and maybe diversify my affiliate links a bit. So in total, that brings me for 13 months of work to £17,432.13. Now on average each month that's made me £1,245 with an hourly average earnings of £31. Now I'm really chuffed with that, especially given the fact the beginning of this, maybe even the first 6 months, I made zero. But I want to include that because it was still work that got me to where I am today. Of course that doesn't include any of the mental time this takes, because if I included that, it would literally probably double the amount of time. I'm trying to get to a point now where I don't just get totally consumed by YouTube and I can take some time to actually just not stress as much, because it's such a stressful process you wouldn't even believe. And it's only when you start doing it you realize how much time it takes and how much some people are putting into it. So that's how much I've got to invest. My tax estimate is around $3,379. I'm not completely sure how much I will have to pay in tax. In the future, I am going to be quite aware of how much that's going to build up, but for the time being, I'm going to just kind of put the money in and not worry too much about the tax. As time goes on, I'll start keeping some cash back. So the account value at the moment, and this is a SIP if anyone's wondering, is £21,426.34. And my total gain / loss is minus £363. Now, it's quite lucky it's come up. It was actually down about £1,000 with the state of the market, and that's because of some of my investments. The S&P 500 has just been hit like a truck, so I have really felt that effect. You can also see down here, I'm still waiting on £1,109 in tax relief. So when I put money in, I get 20% boosted back that comes onto my account. What I didn't realize in here is as I buy the ETF, say I put 1,000 in and I get 20%, that 20% that comes back, they will automatically buy more of the same ETF. Now I didn't really want it to do that, I wanted it to keep it as cash, so when I add money to this, I need to add it as cash so I can choose when I invest it. So the plan will be to get money in and then invest it manually myself. Luckily this time it did work out a bit, and I'll show you that in a minute. So you can see my total contributions are $5,549. That actually includes the government bonus. So in the whole year, I'm able to put 40,000 in, but 20% of that is from the government. Now I might be able to go back into my last year because I didn't use the full allowance last year. I think I put in around 16,000 last year, so I still should have some allowance left if I'm lucky enough to get to that point. I'm not sure whether I'll actually be able to fill it this year, so we'll just have to see. So in terms of my investments, here's what I've got. So I've got my FTSE 100, which is VUKE. The current weighting of each of these is around 30%. And if I go into the detailed view to show you a bit more, you can see with that one, I've got an average unit cost of £33.26 and the last price was £33.65. So it is up slightly, which is pretty decent. And that is up £69. So if I go into that one, you can actually see where it rebought. And this did actually come in quite handy. So if we look at the last 3 months, here you can see the point I bought. Now I didn't particularly want it to rebuy, but that's where it automatically rebought. I'd rather keep the money till I feel like it's a really rough day and put more money in there, but that's what it's done. So here's how my chart's looking. It's really interesting to see these points come on the graph. And we'll just have to see over a longer term period how this ends up. I am a bit unsure about this one because if you look over like a 5-year period, it hasn't got a massive amount of room to go unless it decides to slowly grow a bit further. The thing I do like about this one, however, it does have a dividend of 3.39%, which could be really nice. And that's paid out each quarter. Unfortunately, I have just missed the last one, but I will receive the next one. The thing is with the FTSE, it's got really good, reliable dividend payers, but at the same time, when you look at the long-term chart, for example, if we look over the max period, it has come up slowly in waves, you could argue. But I mean, what's it at today? 33. Look back right here in 2015, it was at £31.80. In comparison to something like VUSA, which has just gone up. So in comparison, it feels like I would rather have more money in there. So I'm debating at the moment whether I sell some of this or not. That's kind of the main thing playing on my mind, whether I just combine maybe into 1 or 2 funds, or I just stick this out for now. Next up is my Developed World ETF. This one's really nice. It doesn't move quite as much as the VUSA, but it pays a slightly better dividend. It's slightly more expensive than this one, but the dividend kind of offsets it. So to be honest, there's very little difference between the two. With this one, you can see I'm down £201, and if we go into it, you can see the point that it's been buying. So what's really nice here that you can see it's kind of averaging down into the position. So as it's falling, it's buying more positions, which is really nice. The question is, however, when you look at a more long-term view, it's still pretty damn high, and it could fall a lot further before it shoots back up. Nobody really knows when it's going to happen, but with the recession around the corner, it's very likely that it will fall more. So what that one does is pretty much cover the whole world in the developed countries. I chose kind of not to go for emerging markets because when you look at them, they're kind of up and down and they don't seem to get really good results. I could have gone for VWRL, but I decided to go for this one because I thought this one's actually outperformed it. Last up, we've got the VUSA, which is the S&P 500 ETF. That one's down 213. That one does move down slightly more than this one just because of how it's weighted. And again, this one averaged down. To be honest, if you put these two charts side by side, they would look almost identical. So here is how it's performed in total so far. I've contributed £20,680 and I've ended up with 20,316. So I'm actually down 2.38%, which isn't awful. Just shows that averaging it in is not a bad option. If I would have just lump sum invested at the beginning of the year, I'd be down way more. This chart never looks very interesting. It's going to need more time to actually get some movement in there, so we'll see how that comes along. You can see down here, I've actually not been paid any dividends as of yet, or any charges. With the charges, I'm planning to keep cash on account, so I'm planning to increase my cash balance. You can see the lovely month-by-month breakdown, which isn't fantastic. I've only really had the balance at the beginning of May, so we'll have to see what happens from here. And in terms of my insight, you can see my geographical breakdown. Equities, of course, I'm 90% equities, which I kind of want to change. My geographical regions, 51% North America, 31% UK, that's boosted by the FTSE one, of course. My top 10 investments, I've got cash, Apple, Microsoft, Shell, AstraZeneca, Alphabet, Amazon, HSBC. They're all pretty standard. Sector allocations, financials, healthcare, consumer discretionary, and then cash and industrials. So again, this is pretty much just what you would expect from these ETFs. You can go into more detail and see how each individual one is broken up, but I don't think that's anything you really need to worry about. Now, in terms of these dividends, the S&P 500 has a 1.25%, and that's again quarterly, whereas the World ETF is 1.7%. So they're not massive dividends. I mean, they're almost half of what the UK one is, but hopefully they'll have more growth. I think it's always interesting to see with these what a long-term picture will look like. It's so easy to get caught up in the short term when really you need to look over a 4 or 5 year timeline, because that's when your numbers will really start to look so good. So what my plan is actually at the moment is I've got all of these around 30% at the moment. Like I said, I'm kind of contemplating in my head whether I want to sell the FTSE 100, but if the market crashes, it could be a nice option. Even if I just get some dividends, it could help offset things quite nicely. But on the other hand, of course, just set and forget into a world fund is also a really good option. So I could keep all three and see how they do, or I could just put everything into the world ETF. So let me know what you would do. Would you rather go for one, or would you rather split it over three? The thing that I really do want to change though, however, is increase my cash position. And I think everybody should be doing this at the moment. So if the market does tank, I want to have more cash available to keep averaging in. And that's really where you're going to make the most money. It's so painful to see the market crash and you've got no cash available, so I'm planning on increasing my cash position to at least 25%. So the next money I put in, I'm going to be putting in on the 4th, and I'm going to put it all into cash. And I think that'll be quite interesting to see how it works and see how it balances out. But yeah, that's a general overview of how everything's going. Do let me know if you've got any suggestions or if you'd like to see more information. There's not an awful lot here on the Vanguard platform, so I did debate whether I go into some news on the FTSE 100 and the S&P 500 and how it's affecting these, but I know from my point of view, I would just like to see the stats and how I'm getting on. Do let me know as well how often you'd like to see these. I think once a month's quite interesting because it documents the whole journey, but if the income just isn't there, maybe I'll spread these out because I think we want to keep this to a low amount of episodes. I think by episode 27, everybody might be bored to death. Hopefully it won't take me that long, but let's just see. I think I want to benchmark this against some goals on where I'm trying to get to. At the moment, 100k is the target in my head. I know it's going to take a while, but again, it's meant to be a realistic approach to how it works. I'm not some kind of lottery winner or mega bucks YouTuber. I'm making a little bit of money on the side, and I'm just hoping to see where it goes. I hope this has been interesting. If it has, please smash that like button. Thank you guys so much, and I will see you in the next video. 'Cause I just wanna see the light.